Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about how this bear market has been historically brutal in many ways, despite the fact that Bitcoin and Ethereum have not put in larger drawdowns in percentage terms from their all-time highs compared to previous bear markets. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. So I want to give credit to the folks over at Glassnode who kind of provided the seed for this idea for this video that I just want to take a step further. So they put out this great report yesterday where they were talking about how on different metrics that you can look at, this bear market has actually been more brutal from a historical perspective than some of the previous bear markets that Bitcoin and Ethereum have experienced. So I'll link to this in the description. It's a great read. They talk about a lot of data, but they're limiting their analysis to Bitcoin and Ethereum. And I actually personally think that examining what's been going on with altcoins is also really important to consider when just thinking about how much wealth destruction really has happened in the crypto space just since November of last year. So what they're talking about in this chart here, and this I think is a good place to start, is this thing that a lot of people are talking about. You see this on crypto Twitter all the time, where people look at previous bear market bottoms. They say that Bitcoin will draw down, around 80%. At least that's historically been the case, going into the 2015 bear market and into the 2018 bear market. And so they say, all right, well, then it has to happen again, right? They say that, Bitcoin won't be able to find a bottom until it goes down to 84%. Now, that could certainly happen. Who knows when the bottom's actually kind of going to come in. But let's talk about what's already happened just at 73% drawdown that was happening across the rest of the market while that's been happening. That would suggest that there's already been a colossal amount of wealth destruction, in some ways more wealth destruction than we've seen in some of these prior bear markets, that might suggest that we're already in especially, maybe in historically brutal territory. So I want to talk about a few different metrics and things to look at beyond just what was talked about in here. But again, this report has a lot of great metrics that go through. I would recommend checking it out for more on this topic. Let's go ahead and talk about Bitcoin a little bit, and specifically talk about the market cap. And I like to talk about market cap in this context just because it's inflation adjusted and not fiat inflation adjusted to the increase in the supply of Bitcoin. Bitcoin, as every block is mined, more Bitcoin gets added into the network, until the last, block reward happens at 100 years, but that's way off. Bitcoin is still an inflating supply. It's just, ever shrinking as halvings happen. But I like to look at market cap because it accounts for that, whereas just looking at pure price would not do so. And what I want to talk about a little bit, and this is what I don't really see people talking about, is most people are focused on just kind of the absolute percent drawdown as it would relate to an individual investor. So let's say, for example, you bought at 69K and you held down to these price levels. What percentage down would you be right now? That's what most people care about and most people are thinking about when they consider a drawdown. How much would the individual investor be down, had they bought in at that price level at the top? But what I think is also interesting to consider just how much wealth in the aggregate across the entire market has been destroyed, and how does that compare to previous bear markets? And what you'll notice, and it's probably not too surprising, is that we've seen significantly greater wealth destruction in the aggregate, kind of the entire crypto community. Anyone who's people who are investing in Bitcoin, there's overall been a lot more destruction of wealth this time around than previous bear markets. And we can just see that in the data. So this is a 74% drawdown in terms of market cap from around 1.3 trillion at the top back in November of 21, going all the way down to at what has so far been the lowest with this capitulation that happened down to 17.6K. Again, don't know if that's the bottom, could go lower, but so far the drawdown has gone all the way down to about $335 billion. So around about $1 trillion of value being wiped out of the Bitcoin market. Now, again, with market cap, that's not a perfect indicator of how much money was actually injected into or lost overall out of this, because market cap isn't a one-to-one corollary with the amount of money that's been injected or removed from an asset. But you still imagine that losing $1 trillion worth of at least paper value from the top down to the bottom is probably hundreds of billions of dollars that have been lost by investors on Bitcoin over this time, or significant amounts of money. Quite nasty, brutal stuff. And how does that compare to previous bear markets? Well, let's go look at the 2017 to 2018 bear market to get a comparison. And if we start, we actually were at about 335 billion at the top back here in 2017. Interesting that we've so far, actually in market cap terms, bounced off of this level more recently. But I digress. So we started there, and at the bottom of the bear market in 2018, we went all the way down to around $55 billion. So about a $280 billion worth of value destruction, more or less, that happened in this time. So that's still a lot, but that's significantly less than $1 trillion, right? You know, we're talking about a fourth, a little bit more than less than a fourth of, or excuse me, a little bit more than a fourth of the market cap being destroyed in absolute dollar terms. And so again, that just suggests that this drawdown has been especially brutal for the market as a whole, but not as brutal for the individual investor who would have bought at the top, right? So those two things are different. That the individual investor who bought at the top hasn't felt as much pain as they would have had they bought the top in 2017, but the market as a whole has felt significantly more pain in absolute terms than back then. And I think that's something that's just important to keep an eye on, just how much value is being destroyed in the aggregate. And then it kind of raises the question, do we need to see the same percent drawdown terms to get to a point where we've kind of gotten to this max exhaustion, this maximum pain, where the market as a whole has experienced enough value destruction that enough people have decided to get out, kind of flush out all the leverage, all that kind of thing, so that we can actually start finding that bottom where the sellers are exhausted. I think that's an open question. I don't think it necessarily has to be the case that you need to wait for some magical drawdown on the individual level before reaching that pain. And it could be the case that a drawdown of significant, just absolute value destruction could be sufficient to start finding that bottom. That could actually end up being a higher percent term, or excuse me, a lower percent drawdown than in previous bear markets, because in absolute terms, you've already destroyed so much more value than that previous bear market. But then even just looking on chain, we can see some evidence that this drawdown has actually been incredibly brutal in terms of realized losses. And this gets a little bit better at this idea I was talking about, is how much losses have actually been realized through this, because this is just telling us kind of paper wealth destruction, how much actual realized loss, how much actual, realized, buying in higher than selling lower has happened in the Bitcoin network. And so we can look at some on-chain data that gives us a better idea of that, of coins that are being spent in profit or loss, and just looking at the net realized profit or loss. And this is being presented as the percentage of the market cap. So this is actually going to then kind of equate the fact that, the market cap was significantly smaller for Bitcoin back here relative to here. This is making it standardized to what the market cap is. So we can compare apples to apples, more or less, when we look at this. And what we can see is that this most recent capitulation we had here, going all the way down to, the local bottom so far at 17.6K, we can actually see that just in terms of the realized loss on chain that showed up, this is basically at the lowest, as low as we've been in previous bear markets. In fact, the 2018 bear market went a little bit lower. The March 2020 crash went a little bit lower. But we're very close. They're basically in the same ballpark as those previous realized loss points. So even though we've had a lower, in terms of just pure percentage terms, drawdown from the all-time high, around 74%, we've still seen about as much loss being realized on chain as we saw back in 2018 when you account for the different sizes of the market cap. And so that's, again, kind of what I was talking about, is that you don't necessarily need to see the same percentage term drawdown from the all-time high to still see the same amount of wealth destruction being created. And so that's exactly what we're seeing here. So we just saw here the amount of paper wealth destruction. Here we're seeing the actual amount of realized price destruction, and it's pretty massive. It has absolutely been brutal. So even though we're at about 10% higher in terms of drawdown than back here, it's still been, in terms of realized loss, quite substantial. And with Ethereum, it tells the same kind of a tale, where we've gone down about 81% in terms of market cap, all the way from around 580 billion down to about 106 billion. So a massive drop off, almost 500 billion, $480 billion drop off. And then, we had drawn down back in 2017 going into 2018, actually all the way down to 94%. So, 15% lower, a little less than 50% lower than we've seen most recently. But then again, the market cap was a lot lower back then. It was only 146 billion, but then drawing down all the way to 8 billion. So an absolutely devastating just destruction of wealth there. But again, not in terms of absolute value, not the same as here. This is 480 billion this drawdown here is more in the realm of, you know, around 336 billion or that thereabout, in terms of the drawdown. And so when you adjust for the market cap, I don't have on-chain data for Ethereum showing the same kind of thing, but I suspect it would be as telling a roughly similar story, where quite a bit, probably in terms of percentage of the market cap turns, we've seen the amount of realized losses that's probably not too dissimilar from what we saw in the previous bear market. So that's Bitcoin and Ethereum. You know, that's just one thing to consider with those. But as I mentioned at the beginning, what I really want to start focusing on next here is what's been going on with altcoins, because that's where I think we've seen a massive loss of value that just isn't going to be encapsulated in these. And because the market cap that's being held by altcoins has been growing in more recent years, you know, there's more and more money being pumped into altcoins with each successive bull run from the past, then there's going to be more and more money lost on those as they draw down. So the first thing we can talk about what that's been brutal with this bear market is just the Luna UST collapse, right? You know, here I'm showing you, you know, this is an absolutely insane chart when you look at it. You know, basically a token going to absolute zero. And so this is from the all-time high down. You know, TradingView, it can't even, it just shows 100% because it's, you know, 99.9999, you know, whatever it is, going from an all-time high of, you know, this is the price chart for Luna of around $121 down all the way to, you know, tiny fraction of a cent. Absolutely brutal. And what really was so destructive about this collapse, and actually I think you can make an argument that the more recent capitulations that we've seen in the Bitcoin price are actually due to contagion with this, with, you know, companies like Celsius or funds like Three Arrows Capital having big exposures to Terra Luna, that probably was the first big domino to fall that's now set off these contagion types of effects. If we go back and look at a historical snapshot on CoinMarketCap of April 3rd, 2022, so this is right around the all-time high for Luna and UST in terms of their prices and therefore their market cap, we can see that, you know, Terra Luna at that time was sitting at around $40 billion in value, and UST was at around $16.5 billion. So collectively, they would have been up at around, you know, $56 billion at their peak in terms of market cap. Now, again, that doesn't mean that people had injected that amount of money in to get those prices that high. You still imagine this is tens of billions of dollars that people had in there, and a lot of retail people had their money in there, as well as these bigger funds, you know, Celsius, Three Arrows Capital, etc., had big positions in the Luna ecosystem. And then that just went to zero practically overnight. You know, in just a matter of days, we just collapsed to basically zero. And that wiped out a huge amount of wealth, frankly, in the crypto space, both among big players and a whole lot of small players, a whole lot of retail investors that wiped them out. So you're talking about kind of retail investor pain. You know, even if we haven't seen Bitcoin fall in percentage terms at the same rate as it has in previous bear markets, I'll bet you there are a lot of retail investors who are down a heck of a lot more now than even the 2017 and 2018 bear market, because they were in too heavily into things like Terra, Luna, etc., and just saw it go to absolute zero in basically the stretch of a couple days with very little chance of pulling anything out of the ashes. And it's really no difference with a lot of other altcoins in the space. So what I'm showing you here is from the website blockchaincenter.net, has this interesting tool that talks about kind of this altcoin season index. And really what it's getting at is, when is Bitcoin outperforming alts? When are alts outperforming Bitcoin? And so it has this nice representation here looking over the last 90 days, how different assets have been performing relative to Bitcoin. So this is Bitcoin here, just down a little over 50% in the last 90 days. But then you just look at the other altcoins as we kind of go through here. So, you know, Litecoin, Quant, Polkadot, Mana, VET, Matic, etc. Just look at how brutal this has been. And this isn't even from their all-time highs, right? This is just in the last 90 days. We're talking about drawdowns in just 3 months of 70% plus for a lot of these assets. And moving on. Now, there have been a few that have been outperforming, right? But that's really kind of the rare ones. Most altcoins have been getting absolutely brutalized in this bear market. And even if we look at some of the kind of darlings of the 2021 run, you know, coming out of the summer, the ones that did especially well, you know, let's look at Solana in terms of its market cap drawdown. You know, it's down almost 89% in terms of market cap value. You know, it was up at around 80 billion at its top. went all the way down to 8.8 billion. So a massive, a little bit less than $70 billion worth of at least paper wealth being destroyed from Solana in this bear market. AVAX, another darling of that time, had massive gains coming out of the summer, and it still is currently sitting higher than it was in the summer in terms of its market cap. But we just look at its drawdown, down again about 88 to 89% from its all-time high, which was up at around 34 billion, collapsing all the way down to around 3.8 billion. Massive amount of loss. And again, a lot of retail investors this time around went really heavy, and just other market participants. Again, and we know this, the Bitcoin dominance has been dropping. The share of the total crypto market cap that's denominated, or that's held by Bitcoin, has been decreasing. More and more people are getting into these altcoins. And so when you're looking at these drawdowns, in some ways, the drawdown that Bitcoin has done is a little bit irrelevant to some degree if people have been shoving so much money into these other areas of the crypto space. Because even if Bitcoin falls 74%, if you're seeing all these other altcoins falling 80, 90, 95%, 99%, some of them, the smaller ones, then it's very likely that the amount of wealth destruction that's taking place, even on an individual basis, kind of the individual investor who has probably, had held some altcoins and had probably held them maybe a little bit too long into the bear market, the amount of wealth destruction is actually probably relatively comparable with this bear market right now as to previous bear markets, when more market participants would probably have had more of an allocation in Bitcoin. At least that's one thing. I don't have data to speak directly to that, but that's my speculation that very well could have been the case. So finally, to kind of wrap this up, I just want to look at the total crypto market cap then. What I'm showing you here is the total market cap subtracted by the market caps of the three largest stablecoins, because I don't think that really counts for what we're looking at here. We don't really care about how much money is being locked up in stablecoins. We just care about volatile assets. So this is the total market cap that's subtracting out the USDT, USDC, and BUSD market caps. Obviously, there's some other smaller altcoins there, but those are small enough that I haven't bothered to take them out. What we've seen is a drawdown of about 78% in this most recent bear market. And we compare that to the last bear market. Now, I should note with this one, there wasn't enough data with the stablecoin market caps to go back this far. So this just has everything in it, but they were so small back then that it's not going to be diluting it too much. It is still smaller in absolute percent terms, about 87% versus what it was here again. But still, I expect that, if retail investors had a larger share of their portfolio put into altcoins, they've still experienced a pretty historically massive drawdown. And the final thing I do want to just throw up here, just to kind of show off some of our models. So these are our UDPIs, our risk indicators for Bitcoin and Ethereum, and they're currently at basically the bottom of their ranges. They're at negative 4.9 for Bitcoin, 4.94 on the long-term one. So these are reactive moves that play out over months, more macro-focused. What you can see is that these are basically confirming what I've been talking about, where right now, in their estimation, this is about as bad as it's ever been. Now, we compare the bear markets, in the past, we've realized about as much downside potential as the model thinks is plausible, as was the case back there. And so that's just one more piece of evidence that just shows how, in my opinion, just how brutal this has been when you're kind of comparing these two different times to each other. So my main point of this video with talking about this is that, you're going to see a lot of people talking on crypto Twitter and elsewhere about how, until Bitcoin goes to, 85% drawdown from its all-time high, there can't be a bottom for Bitcoin. And that could be true. It could be that we have further to go. And frankly, who knows what's going to happen? We could go further than that this time around. If the macro conditions push the stock market into a massive 2008 style crash, maybe that Bitcoin goes down 90, 95%. Anything is possible. We really don't know. But certainly I don't think that it's necessary. And if you're just purely using a drawdown from the all-time high to kind of estimate wealth destruction and pain, I would actually argue that as the market matures and as kind of less speculative money is in Bitcoin and more of the speculative money moves elsewhere, you can actually see Bitcoin drawing down to a smaller degree than in previous bear markets, but still have market participants realize the same amount of losses as before. And we even see within Bitcoin itself that's already playing out as a percentage of the market cap. Then, especially when you account for altcoins, the larger share of the market cap that they hold, and the amount of losses that a lot of people have been facing, probably especially the more the people who are probably using a lot of leverage are the ones who, add all that kind of volatility. A lot of them have probably been washed out by now. They've lost too much money. They don't really have much capital left to deploy in this context. And so if that is something that's necessary for a bottom to form, where you've really seen this maximum pain, everyone who's going to sell has already done so, all the capitulations happen to form a bottom, then from a historical perspective, if historical trends continue, then there's actually arguments that can be made that this has already been as brutal as we've seen before, if not more brutal. So again, highly recommend going over and checking out this Glassnode report, which gave me kind of the germ to kind of make this video. But I just think that looking across the entire space, and not just Bitcoin and Ethereum like they do, but also just consider the absolute devastation that's happened to the altcoin market, really gives us a picture of how brutal this bear market has been so far. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.